Okay, it is Tiny, and I am joined by Mr. Paul Schatz, and we are here tonight to discuss the market. Welcome to the market strategy session for the week of February 1st, 2016. If you have not gone to Facebook.com/Paul and Saul, then you're missing out on all these great posts. Go and sign up right now. Second, if you are not reading the blog, paulandsaul.com/blog, go ahead. I put up a ramblings post this week. Join the list while you're there. Sign up to the mailing list and you'll know whenever we update with any new posts. Let's look at the economic reports. Monday, 10 o'clock, ISM manufacturing, and Draghi is speaking at 11 o'clock. Now, yes, that is mostly for the Euro group, right? Or it will likely affect the Euro, but of course that could have a ripple effect into the U.S. markets. George speaks at 1 o'clock, FOMC member George. Fisher speaks at 1 o'clock on Monday. On Tuesday, FOMC member George speaks. Wednesday, ADP non-farm employment change, but that's pre-market. During the market, a couple of reds, ISM non-manufacturing and crude oil. Draghi speaking again Thursday morning. 8:30, we have the weekly unemployment claims, and then a bunch of other things. And then, of course, Friday, we have the job numbers, which are much watched. Appreciate it, Johanna. Much watched numbers that are due out on Friday at 8:30. So, Friday, high volume pop move out of a small consolidation. If everybody saw it, let's look at the futures real quick. Down about 4 points here. But last week, we kind of went sideways with the FOMC meeting and then Apple and Amazon earnings. And then Friday, boom, we popped up with the Bank of Japan going negative. And that boosting the market. Paul, what does the Bank of Japan going negative have to do with the U.S. market? Why would the U.S. market react to that?
Well, they spent 15, 25 years absolutely resisting negative interest rates and just doing on and off QE. So now this is the next step in their fight against secular deflation. It's a big one for them. And so they've taken QE and gone a step further. And now it's like in Japan, there's not a single thing that's off the table. And they've said, Abe has said, not only has he spoken, but he's actually carried through. Whatever it takes, we're going to do it. So come hell or high water, they're going to get the money out of the banks there. And negative interest rates is one way that you can affect that, because who wants to give their money to a bank and then get less back? So that's seen as very stimulative for the Japanese economy.
And again, how does this affect us here in the States? Why did the States react that way?
I mean, it's kind of like when China does something. It's a global economy. Japan is certainly, at worst, the third largest economy. And if that economy could ever turn around, if you want to see some kind of secular, real bull market in the globe, I would argue if Japan gets their economy turned around and their market turned around, that reverberates all over the world. And I'll argue that it's more important than China. That's a biggie.
So you think it's U.S., the Euro group, and then Japan, huh?
Um, I guess I would say that, and I don't argue. I could make an argument that Japan's more important than the Euro group too. Japan's really big. Um, you know, China's more important to Europe, I would say, but I think there's so much baked in the cake and expectations of Japan just going on like this for decades that if there's a sign of a turn, it's going to be big. So I would not underestimate what the Japanese are doing, not to mention the fact that, as we know from Yellen's last press conference, she refused to take negative interest rates off the table, which is in stark contrast to Bernanke and Greenspan that said it's not going to happen on my watch. Well, she didn't say it wasn't going to happen. She said she refused to rule anything out. That, to me, was a trial balloon to see how we react. I said it's politically untenable to have negative interest rates, but when you have a new president, thank God, in 2017, maybe it won't be as politically untenable. I just can't fathom negative interest rates in this country.
Tell us,
which means nothing.
what does that mean? What does negative interest rates really mean?
Go to the bank, put your money in, get less back, and you take it out.
Wow. So it's like binary options.
So in the northern European countries now, negative interest rates are going to be, I think, Denmark maybe 75 bips, 50 bips. That means if you put your money in the bank, $100 in the bank, you get 99.50 out at the end of the year, at the end of next year. I mean, that is insane. So why do they do it? They're forcing people to get out of the banks. Banks have too much money. They're forcing you out into something else besides saving, checking, CDs. More importantly than that, does anybody know on StockCharts.com how to pull up the daily percentage of volume? Because I don't on Stock Charts. Tiny, do you?
No idea. I could barely get through what I have to use stock charts for. I mean, I get 6 charts from stock charts every week for the newsletter, but just the McClellan and junk, and I just do junk there because I'm already there. So
I got to find somebody who's a Stock Charts guru. I would pay them to set up like a my watch list. I don't have to do this every week. Because they've got everything. I think one of my buddies is like an owner of it, but I feel bad asking for stupid questions because I'm an idiot.
Well, then you wouldn't be talk. Then you wouldn't talk to anybody. That was the problem.
What do you mean?
Nothing.
Are you breaking them off on me? That's what you're doing?
Yeah, breaking off on you? Really? Wow, it's nice. Where'd you get? I didn't know you were so hip.
I'm hip, all right. I had Dylan in Vermont this weekend alone. It was great. Went to the Yukon game. Went to look for a car. We had dinner. We went to Vermont. We skied.
You're getting another new car?
Dude, don't you, I told you, the hood of my car got crushed by ice and all kinds of issues with it. So I can get a brand new 2016 for almost the same price as the 14 that I bought. I normally drive my cars into the ground. This one is jinxed. I want to get rid of it. All right, so you want me to start?
Go ahead.
Are you hanging out?
No, I have to actually go out and meet somebody.
I'm the only guy you know. Who's going to meet you on a Sunday night?
It's true. My friend actually has a show in a couple of towns over, and afterwards he's
Oh,
coming
nice.
by. So I have to go and meet him for pizza. I have to force pizza down my face, which is such a
All
stretch.
right, so what am I doing when I'm done?
Just, it's all right. I'll come back and get it. By the way, let's talk about next week. What are we doing
We
next
have Super
week?
Bowl.
You want to do Saturday again?
Hold on, let me look at my schedule. Uh, let's see. Saturday is the 6th. Um,
All day.
right. So I'm thinking, I'm not sure it's not convenient for everybody else, but I'm not going to go to Vermont, which means I'm going to do 1,000 things locally. Let's see, we got UConn game at 1, 2, 3. What about like 5 o'clock
On Sunday.
on Saturday?
All right.
Does that work for you?
It always works for me. My wife
Uh-huh.
doesn't even get home till 7 o'clock on Saturday, so I'm home anyway.
Okay.
Doesn't matter to me.
That way, if I actually get a life and go out with my wife, I can go out. Or Katie has softball practice, so at 7. So in any case, I'll be here. I should be here at 5.
Okay, 5 o'clock on Saturday.
Yep. That is unless there's a blizzard in Vermont, in which case all bets are off.
Hmm.
All right. So you want me to start?
Yeah. All right. So next week, everybody, will be 5 o'clock on Saturday. I will send, as you know, a billion emails anyway.
No.
So that's it. Everybody have a great week.
Dude, I had a client unsubscribe to my communications, and she left me a note and said that I communicate too much.
To you, not because they're on our list, right? Just because
No,
they're on
just
our list.
my own. I said, I communicate too much. I give you too much information? Yeah, I'm not really interested. Like, okay.
Yeah, I mean it makes sense. It does, right? I mean, people they don't care. They just want you to make money for them. Right? I mean, that makes the most sense.
No, it doesn't.
You don't think so?
No, they don't. I think the best investors are an informed investor. So, like I told you before, when I have a client, I don't consider them my partner in managing their account. It's my job. We have a partnership in managing the relationship. But it's like people who subscribe to our newsletter. I care what they think, but if we're in GDX, I'm not really interested in having them chime in that we should be selling it or doubling down or whatever. It's when it comes to investing or trading, it's hard enough to pull the trigger. Too many cooks spoil the stew.
Right, but this has nothing to do. This has nothing to do with. I don't understand what you're talking about, though, because you're.
You know what I'm saying is I think it's important that people are informed.
It doesn't matter what you think. It matters what they think.
No, no, it's my business.
Well, yeah, but it doesn't matter that if they think they should be informed or not.
Well, it does to me because the best clients are the educated clients. The people who stay the longest are the ones that I have a good relationship with and they're educated on the markets versus somebody who has no clue. Like I have a rep who is probably 10% of my business who is just literally pulling account by account out right now. Ask me why. Why? Because he supposedly sold my stuff on an alternative to the bank, which I'm never an alternative. I have volatility. So he told the clients, yeah, your money's sitting in the bank. You might as well move it to Paul because it's like having a bank, but you get better returns. So they were shocked. Some have been with me 3 months that actually their money moves up and down.
Yeah.
So,
All
all
right.
right, I'll stop ranting. I've ranted about this for the last 4 days when he said I'm pulling a bunch of business away. All right.
Take care.
Uh, what's that? Oh,
Yeah.
you're coming back.
Yeah. Well, I'll be back later. Just let it run.
Don't hit stop.
You can't, can you? No, you can't hit stop recording.
Okay. Yes,
Wait,
I can.
it says stop recording for you?
Well, it says start recording right now.
No. Forget it. I'm recording.
Okay. All right.
Just leave it alone. Just leave. Don't end the
Okay.
webinar for everybody. It's fine.
I
Bye.
don't. I'll just leave. Very good.
All right. Bye.
Shalom. Okay, guys. Sorry for that distraction. I'm a little distracted. I want to cover a bunch of stuff, so hope you got some water and are relaxed. I'm gonna cover a lot of stuff tonight. Not that we don't normally cover a lot, but as I was driving home from Vermont with my 7-year-old, I kept thinking about all these things I wanted to cover because we had a big week last week, and I think it's important. You may not think it's important, but I do. As Tiny said, the futures, they're down 20 basis points after a 250 basis point move Friday. Being down 20 basis points is really nothing. Who cares? So last week, we came into the week, and my thesis was, and you're always welcome to call me out if you think I'm full of it. I said we had to move off the low. The model calls for weakness early in the week, 1 or 2 down days early in the week, and then a much better rally. So we had Monday was down pretty significantly. Tuesday doesn't, hold on a second. Tuesday doesn't look like it from this chart, but we closed down here, and on Monday, we had a big day on Tuesday that was, from memory, 90% more, 92% was up volume. And then Friday was the rip your face off move. That was the one that I was like, whew, I feel a little better now, having stuck my neck out on Wednesday's close saying it was the internal or momentum bottom. So I still believe that Wednesday was the internal low. I'm very glad the market cooperated. I said it last week, and I said it many times in between, that I can't remember the last time we had a decline in the market where the buy the dippers weren't around. Nobody said to buy this dip, which is shocking to me. Everyone's comparing it to '08. So that's one thing I wanted to comment on, because I wrote this blog. Is my stuff autofilling now? I gave my wife this laptop, and now it doesn't behave like it used to. So here's what I wrote Friday, and I think it's worth your time to read it, not just because I wrote it, but I think it's a good comment. So I've been talking about this price analogy of 2016 to begin the year and 2008. It has moved almost lockstep. In '08, we bottomed right after MLK, and we had this nice decline. And in 2016, guess what? We bottomed right after MLK, and we had this nice decline. Fundamentally, they're not the same. I said it a million times. It's not the same. And the other thing, which is very similar to 16 and 8, is that in 2008, I did not see this decline coming. And 2016, while I thought we'd pause, I did not see the magnitude of this decline coming. So price both bottomed in MLK, fundamentals don't look anything alike, and Paul screwed up both. So eventually they're going to break apart. No price analogies continue on forever. Here's what '08 looked like after this. Okay, we rallied for a couple of weeks, we declined, we rallied again, we put in the secondary low in March of '08, and then this rally doesn't look like it, but we had a 15% rally. So my guess is somewhere in here where the analogy is going to break apart. But until it does, it looks pretty good. head and shoulders bottom, you could say, shoulders, I mean, a lot of things you could say, double bottom, head and shoulders, complex bottom, blah, blah, blah. All right. I'm glad we rallied Friday. I went home feeling a lot better about the now that back then what I called the crap that I owned, didn't feel good about having business being taken away from me, and I didn't do anything to deserve it, so I'll continue to complain about that. But that's neither here nor there. A lot of good things on Friday. What the heck is this? So we had another 90% day in up volume. We've got 2 in a week. That's a thrust. That usually has bullish implications regardless of whether we're in a bear market or a bull market, usually. You're almost 10 to 1 on the up and down issues for the second time in a week. And then everything was essentially green, except for the yen and the euro. But we were up across the board on Friday. So the Russell led on Friday, which I like because I still own the piece that I've been getting hammered with. So I'm glad the Russell led. And all the bears were just, all the ones that said sell the rally, sell the rally. Well, if they didn't sell the rally before Friday, they're kind of screwed now. Something I like to see. But really, it was an across-the-board move. Biotech is maybe the lone standout that looks kind of sick. Where's biotech on my screen? Oh, down here. We'll look at biotech when we go on. But Friday was a big day. I'm going to pull up some weeklies and monthlies really quickly. And I'm not going to look at questions right now. I will answer them, but I want to go through stuff first. So let's do this. Let's reset this. So we now have a full-fledged retest of the August low, and it has been successful so far. Friday was a big day. What could happen from here? Well, the most bullish thing you want to see is that the market does not let up. I mean, I guess you want to see a repeat of Friday, Monday. That ain't going to happen. We're not going to have a ripping off your face rally Monday. If we don't give back a lot on Monday, and Tuesday and Wednesday, then I'll say we have another leg higher. That'd be really bullish. If we gave back Friday's rally pretty quickly, guess what? Then we got trouble. Those are the two kind of on the outside solutions, outcomes. I could certainly see over the next, 2 to 3, 4 weeks, continuing higher towards the upper 1900s. That would make perfect sense before any kind of overhead resistance came in. So for a bear, if you're a bear, you got to step up quickly in the first 3 days this week. Dow also, it's almost the exact same. Could we get a rally back to 17,000? Sure. Is it going to happen? We'll see. Another key week. Looks very similar to the S&P. It didn't fully come back down to the intraday lows in August. This is a funky low, as you know. Here's the real Dow. Similar. Okay. Mid caps. I'm going to use the index. I own this as well from much higher levels. And same thing, except this is weaker because we're way below the August and October lows, but we're rallying nicely out of here. The smalls, we know the Russell had a big day Friday. The Russell is trying to step up. As I said last week, the first rally out of a bottom, the crummiest stocks rally, and the most beaten down indices rally, which is what's happening now. The question will be, if we get a pause, will the Russell continue to lead, or does it cede to something else? I don't have an opinion yet. And here's the NASDAQ, the Qs. Clearly the price pattern has been stronger. I don't own any Qs anymore. I migrated out of them. But the price pattern here is much stronger. All right. Let's go to Europe. I've said for a couple of months, I don't have a strong feel here. It's bouncing as it should, but with the rest of the world, there's nothing really to glean from Europe yet. And the emerging markets also bouncing a little stronger, which is a nice sign for now. That maybe there's some kind of sea change here. Way too early to call that. All right, let me pull up some weekly charts first. Let's go back to the Dow. And let me see if there's anything I want to glean. So here's a chart of the Dow on a weekly basis. Just so this looks like a big top forming. Those of you guys who are in the market timing class know what this setup is, a very ugly setup. And this setup usually leads to this low being significantly broken. Just as my daughter would say, just saying. But I'm certainly not going to say that yet. I want to see how far this rally goes. S&P, kind of the same setup. I like this a little better. We flushed out the lows. Both should rally from here. Oops. Mid caps. Yeah, there we go. Get rid of all this ugliness from August. This is not as bad of a pattern as the Dow and the S&P, but it still ain't great. It's still a very massive top forming. The question is, did we just see a sufficient decline for this top, or are we going to get a rally and then cut them loose again? I leave both scenarios open in the short term, intermediate term. Russell 2000. You could certainly argue that the Russell has already completed its decline, so that this peak led to this pretty significant decline. Europe, we give a beautiful reversal. Was this the low and we're done? Hard to believe. Emerging markets, kind of the same thing. Emerging markets, as they go to a monthly chart, for those of you who care. Here's a monthly chart of the emerging markets. They've gone nowhere, essentially, since 2005. Eventually, they're going to get going. They're not done for the rest of our lives. I will keep emerging markets front and center for me for a long time because I think the next move is going to be like a 100% move in the EM space. And maybe it coincides, frankly, with the dollar peaking next year. I think the dollar still goes higher. Let's see. Anything else in the Dow and the monthly? No. S&P and yeah, there's nothing. All right. So let me just look at questions and then we're going to forge ahead. Thank you, Kevin. I appreciate that. Would I start nibbling at EWJ? Here's a monthly chart of EWJ. It's gotten nowhere since 2004. Let's look at the one that matters. Johanna, let's start nibbling. I would say this. If you started to own EWJ into weakness, not into strength, I'd want to keep a stop in of maybe a point, $1, but I'd only buy it into weakness. I got a headache forming today. Let's see. Bill, is the carry trade a big reason for, Bill, I don't know how much money is left in the carry trade when our rates went negative. So it used to be you would borrow money in yen, convert it to dollars, and then buy stuff here. I haven't heard anyone whisper about it, so I'm not sure, Bill. I should do a little work on it and find out. Let's see. Thank you, Randy. And Nick. No, guys, I wasn't talking about you guys telling me I communicate too much. I was talking about it was a client telling me that. That's okay. It's, of my client base, not everyone likes me. I'm sure. I'm positive of that. And I'm not for everybody. I run my business my way, and I believe in really high touch. So I had a client email me last night and said, "Hey, first day skiing in 25 years, blah blah blah." So he chatted over email for a while, and I said, "We should go ski together." I like to hang out with my clients, considering they butter my bread. Let's see. The action in the utility average has been very constructive. Burwell, I will get the utility average. The market one. So Burwell said, I pulled up the comp of 08 with 2016. I do not think the market continues to follow 2008. No. Can I say no chance? No. I think it's less than 1% chance. So, no, I don't think we're going back to the March 09 lows. Even if you have this really dour opinion of the economy, how are you going to have a market collapse with the banks sitting on $2 trillion? I don't get it. Yeah, the energy is going to weigh on the banks, okay? They could write off, in a worst, let's say they write off 10 or 20 billion dollars, which is a crazy number. Still doesn't move the needle. Jay, I'll pull up RSX right now for you. All right, so here's Russia. Big move. Something happened in Russia this week. I have no idea what. But that's a pretty powerful move off the low. Would I buy it up here? You guys know me. Absolutely not. I would, because I'm crummy at buying after big runs. I'd wait and see how the first pullback looked if I wanted to get involved, but it certainly looks like it wants to go higher. All right, let's go on to the are international banks a concern for our economy, Adine? I don't think so. With JP and Citi and Morgan Stanley, that is, and Goldman and Wells, they're in really good shape. So even if if Deutsche had gotten in trouble, would the markets go down? Yeah, but I don't think it's meaningful. I don't think they can topple. I think they have almost no impact in our economy. So, yeah, I know this. Well, the Saudis, Johanna, I think, are you referring to my comment about what happened in Russia? Because we know that there was a rumor this week about Iran coming online, but emergency OPEC meeting first, blah, 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 blah. We'll see. I do continue to feel strongly that the reason for the market decline is 80 or 90% oil and 10% everything else. And that's because there's so many investment or securities tied to these oil companies. But I don't think that the price of oil is going to topple any of our banks. Yeah, I know the Russians spread the rumor, but I don't think that's why the RSX rallied, 20%, Dimitri. But yeah, I know the Russians are spreading the rumors. It's funny because the Saudis hate the Iranians, but the Russians Russians love everybody that we don't like. I read a study. I didn't do the study on crude that said, boy, I can't remember what it was. It had to do with the size of the rally over 3 days and what percent of the time it led to significantly higher prices. And I immediately pointed to this and said, well, it wasn't right. But this may be different. I just can't believe that this candle was the final low in the bear market in crude. Just an odd way to bottom. Weekly chart of crude. I mean, the ingredients are certainly there for a bottom, but so is it here. This is the one that got me, as you remember. I thought that was, well, I thought these two were the lows first. We had a retest, and I thought we'd go. And then we went down again. I'm like, okay, Paul's wrong. And then I thought that was the low, had all the ingredients, and we rallied a little bit. And then we collapsed again. And now this has the makings of some kind of low. All right. There are 4 key sectors. Trannies. Nothing new. Yeah, my wife thinks when I say not a transvestite. My wife thinks whenever she hears me say the word tranny, it's a transvestite. Nothing new here. They rallied as they were supposed to, but there's really nothing redeeming yet about the trannies. I keep saying, FedEx and UPS have had major declines in the face of lower oil prices. So that's of note. Let's see. Consumer discretionary. Most of these charts all look the same, so I'm not going to spend a lot of time on them. It looks like the market. Consumer discretionary. Semis. Huge day on Friday in the semis. Huge. Beautiful little impulse. We consolidated. I talked about it last week. And boom. This looks like it's got another 5, 10%, maybe not 10. 5 to 7% rally in the semis. And the banks. Banks just stink. Banks just stink. I find it hard to believe that this is a low in the banks. So why are the banks collapsing? 2 reasons. 1, the likelihood the Fed is not going to raise rates. And 2, because of all the potential internal energy issues at the banks. Again, I don't think they impact the banks to the point of bailouts or insolvency. Let's look at some weekly charts. Banks on a weekly basis, a nice reversal. I will say that last week. You can see this all over the place. A nice reversal in the banks, and for sure, last week was the reversal in the semis. Discretionary looks good on a weekly basis. And the transports, make my wife happier, looks fine. So you have reversals all over the place. Let's see how far these things can go. And more importantly, let's see what really leads when we get out of this first leg higher. Okay. Let's continue on. IGV. Friday, it's funny. This has been our leadership sector forever. But Friday, look at what happened Friday. Big day, right? Almost 3%. But it should be higher. Chart-wise, price-wise. Look at the telecoms. Boom. Love that because I own AT&T and Verizon. Beautiful run. Absolutely textbook. Would I buy telecom up here? No. Wait for a pullback below 27. But what a beautiful move in telecom. And it looks like there's a lot of demand for dividend stocks, which is good because I have a dividend portfolio that I could use to help in. Diversified financials, they kind of stink too. Not as bad as the banks, but nothing great. The retailers are bouncing. Nothing great there. They got big problems. The home builders, it's kind of the same story. Industrials look like the market a little weaker. Materials, they stink. Energy, XLE. Energy, big story last week. Good, because I still own those two garbage positions that have gotten decimated. Yes, I'm whining, I know, sorry. Huge run in energy since the low. And we're up, what, 18%, right? 18% in energy off the low. Oil service not as strong, but still a nice run. Airlines, this one is a little bit of a surprise. The airlines kind of stunk it up last week. So, not good. Solar, obviously, bounced, but with oil prices down low, that it really hurts solar. Nothing really to glean from that. The internet stock, which I continue to own a big position in, and I do wish I'd sold it up here when we talked about it. Disappointing move last week. We know how great Facebook's earnings were, and we know Amazon really stunk it up. So you have a group that is kind of hanging around. I still believe this has 70 written all over. The 200-day moving average is there. There's a gap up here. So I think FDN could get a little bid. I'm wondering aloud now whether its outperformance is gonzo. Here's software. Here's healthcare. Very disappointing. Very, very, very disappointing. Didn't have the decline the market did, but this is not good action down here. And biotech really stunk it up. That is downright awful. Awful. So we know that the old leadership of healthcare and biotech is long gone. New leadership emerging. The REITs had a decent run as people wanted yield. Not great, but decent. I still own my staples. I'm happy to say they're only a day away from all-time highs. So I'm happy because I own it and I own a big position, but it's not good for the market. It's not good for the market when staples are leading. And you can go back to just a simple XLY divided by XLP. You want to see this during healthy markets. You want to see a rally by XLY over XLP. What do we have now? The opposite. Ain't good. Very disappointing. And utilities, which somebody mentioned earlier, I didn't really have taken off. The last 2 days, look at that. They were trading range. Oh my gosh, boom Thursday, boom Ray Mancini on Friday. Let's dial down to a weekly chart on the utilities. I wish Tiny were here because maybe he would say this is kind of a rounded bottom forming and we're going to new highs, which the looks of it says the Utes are going to new highs. So you have utilities leading, staples leading, they're defensive. That certainly indicates slower growth, if not outright recession, which I don't think, but I do think growth's going to grind along, which is very good for these stocks. I'm going to bang through the weekly charts very quickly and only stop if I see something important. I mean, here we go. Software, back-to-back bottoms. Software's one. If it's going to go, it's going right now, within a week. Software should rally within a week if it's going to go. Yeah, it was textbook. Beautiful hammer on telecom, and we got follow-through. Beauty. Nothing there. Retailers should bounce, but I'm not convinced that this is the ultimate low. Home builders also should bounce. Not convinced it's the ultimate low. Industrials, same thing, could bounce. Not convinced the ultimate low. Materials for sure, same thing. Energy stocks. This one I could make an argument that the energy stocks have bottomed, maybe crude is not, and on the next decline, the stocks don't make new lows. We shall see. Can we get like a 200% move in OIH this week, get it back to like 75, that'd be great. I'd be really happy. Let's see. Internet, nothing to glean. TAN, nothing. Jets, nothing. Utilities, we did already. IYR, looks good. I like how we took out the lows. I like how we're rallying. Unfortunately, the strongest sectors look like they're the defensive ones. And XLP looks like it's going to new highs maybe this week. All right, questions on sectors. Let me back up. I bought the XIV on Wednesday. Oh, Russell, you are the man. Oh, my God. Russell, you do, that is what I did that paid for my cruise last year. I think I traded 1,000 shares of XIV. I made 10 points, sold it, went on a cruise. And that's how I justified it. Not to mention, then I said, I'm not going to think about the fact that I bought oil along with it. That was getting clocked. I own XIV along with you, Russell, although I own it at higher levels. I'm going to hold on to it. If you bought it on Wednesday, you bought it absolutely textbook perfectly. Good for you. Just make sure, there's nothing wrong with selling a quarter of it or selling half or putting watch a stop on it so it doesn't back up a lot. This is really volatile, but you did everything the right way. Don't turn a profit into a loss, Russell. But really nice job. If Hillary were to lose in Iowa and New Hampshire, might Wall Street stand up and take notice, or is it way too early, Burwell? Burwell, I think that if Hillary really began to falter, the intelligentsia inside that party would find a way at the convention to, draft Biden or Lizzie Warren. I cannot believe they will let that wackadoo Bernie Sanders stand for election. I just can't believe it would happen. IYT did not take out the high of that week on Friday. Johanna. IYT, no, we are a little bit short. But IYT, Johanna, still should have further to go. Even if we're going back to 100, it still should have at least a couple percent left to the upside. Airlines and cruise stocks are working on the Zika. Yeah, so the camp board that I sit on, we send our teenagers to Costa Rica. So we just had a meeting with our medical team to talk about the Zika virus. And I'm no doctor, although I pretend to be at parties sometimes. But I think it's too early for the Zika virus to get the attention that Ebola did. I know they're nothing the same, but I think it's too early on this. Burwell. Okay, so Burwell said the Dow Jones Util average. Oh yeah, you're excellent observation, Burwell. He just wanted to say that the youth took out their August and their October peaks. What did the Ridex Utilities Fund do? No, it's not there yet. Okay. Dimitri, I will get to the 30-year bond right when we're done with these questions. I bought some Fed puts on the S&P at the close on Friday. Okay. Gold held in during the rally. I think this is a bounce in bear market. I will get to gold right away, Kevin. I'm going to do gold and bonds right now. What do you think about the SOX weekly chart, Mike? Let's take a look again. God, I got a headache. It looks kind of like the market. My worry is this, and this is any 10-year-old who can read a chart. Until the SOX either gets above this high or begins from lower levels, I'm going to be concerned. So until the SOX takes out this high or begins a rally from the 60s, I'm going to be concerned. I just don't like how all these sectors look like they're big tops. Okay. All right, let's forge ahead. Go back to daily charts. GDX. It's had a beautiful run this week, and it looks like it wants to poke higher. I guess I would say it should test this high up here, maybe poke above it, and then decline on GDX. And gold, here's gold. It's not conforming to any historical norm. Okay, here's gold. If you want to know how a commodity puts in a long-term bottom, here it is, guys. It bores you to death over weeks and weeks and weeks and weeks and weeks. But frankly, I'd like to see, because I think gold's going to 2,500 by the end of the decade. I would like to see gold have one more decline to new lows, especially if it can get sub 1,000. There'll be no bulls left, and then I think you get a huge run in gold. If it doesn't go below 1,000, then it makes it more difficult. But it could certainly rally in the short term. But I don't have a strong opinion other than that. Copper, as we know from weeks and weeks and months and months and months and months, smart money's been in it. They've been long and wrong. Metal is finally rallying. Nothing in the weekly chart. I don't really have a strong opinion on copper. It should go a little bit higher, but that's all I have to say about that. I feel like Forrest Gump. We did copper. We did gold. We did crude. Oh, natty gas. Right. So we continue to talk about, is this the final bottom in natty gas? It had a monster run. This is an unusual decline if this was the bear market low. But now we're having a funky rally again. To me, it could go either way. I don't know. This is just not conforming to any kind of norm. So I don't know. Bonds. TLT, I still own it, as I told you for the last number of weeks. And I didn't buy it because it looked good. I bought it because it's a mechanical system in my conservative macro portfolio. I'm glad I own it. It's the only position I own, I think. But I don't know what to do with this. This looks really sloppy up here. So I do not have a strong opinion. Let's look at the yield of the 10-year and see if we can glean anything there. I don't have a strong opinion there either. I thought we were going below 2%. We did. Where do we go from here? I don't have a clue. Don't have a strong opinion. Here is junk bonds. This is some move off the low in junk. This is really, really strong. And that's because of the energy bonds. And here's a plain vanilla fund. Monster move off the bottom. Monster. Is this finally the bottom? If it's the bottom in oil, it's the bottom in junk bonds. If it ain't the bottom in oil, then junk bonds will be revisiting these lows again sooner than later. AD line, nothing to glean from that in my opinion. Here's the Shanghai. If you've read my blog, I think I was looking for 2,600-ish, which represented a 50% decline. This is close enough for government work. I like you have a hammer, and then you got a bullish engulfing. This looks pretty good. I would take a shot with the real Chinese market if I could, not FXI. Let's see. Okay, covered everything there. Let me look at some questions. Burwell, is RIC a stock? Let's see, is gold finally showing bottoming? You know, Johanna, it's not bottoming like it normally does. So this may be an atypical one that we look back on and say, wow, it fooled me. This is not how gold normally bottoms. Burwell, you can email Tiny about the stock. That's his department. You think the markets will make a new low before putting in a higher high? No, I think that this rally has longer to go, Nick. But I do give it. One of my scenarios is that this rally peters out in another 10 days to 2 weeks. Then we put in a secondary low in the stock market early mid-March. Then we have a much better rally after that. So it's something I'm certainly looking at, but I think we're going to go higher first. Because if we turn tail right now, it will get ugly really quickly in stocks. Okay. So we did bonds, we did stocks, we did most of the commodities except for the ags. Currencies. So here is the euro. And after this big move, we've consolidated. If we poke out the top, I would want to get short. Here's the weekly chart of the euro. We're consolidating this ginormous decline. Again, I think any rally you get towards 110 is a screaming short in the euro. The yen, I said it last couple of weeks. This was the top. This was the top. This is the top, and now we know it was right. That was the top. And I think the yen's going to 50 or less. Weekly chart of the yen. I've been saying it for years with you guys. Anytime the yen rallies, you just short it. Sometimes the rallies go farther than you think, because I would have shorted this right here. But ultimately, the yen's going down. And I don't think there's anything that anyone could do about it. The Bank of Japan wants the yen down. They're going to monetize all the debt, stimulate the exports, and then finally, when the government owns all the debt, they can raise interest rates. The British pound, which I like for a trade from last week, still looks like it could go higher. FXC also last week, I like this down here. I'm getting a little tired. The trade, not me. Maybe I am getting tired. Let's go to the ags, the grains. I've liked wheat for a couple of weeks. It's just stalling. It's not really doing a whole lot. On a weekly basis, again, this is how long-term bottoms are made. They go sideways in a bottoming formation forever. They bore everybody out. Still, here's corn on a weekly basis. Looks very similar to wheat. And beans on a weekly basis, a little weaker. Here's beans. If I had to play them, I'd play them all to the long side. I'd just be really nimble. I would not stick my neck out. They all look like they want to continue to go a little higher. But it's not the one where I'd load up the boat. Sugar. Finally, we talked about being short this for months. Finally, the bear is taking over. I love to see this. Smart money started to get nervous here. Nice rounded top. Boom. Cotton. It was doing nothing. I said pair of twos last week. Nothing's changed. Still pair of twos could go either way. Cocoa. Cocoa is now back down to levels where it's worth a shot to the long side once again, but a really, really, really tight little stop in on cocoa. And coffee, will it ever go up? So this is essentially a year-long bottom. It's not long enough. It's going to frustrate everybody for a while in coffee. Let's see. Burwell said, my $2,500 forecast in gold. Do I believe the low in gold that you're waiting for? Yeah. I don't think we've seen the low from which 2,500 will be the reality. I think that low's in front of us. Now I'm going to mention one more thing while we're all here. I'll use the Dow, but it really doesn't matter. So you got a couple of scenarios here in the Dow. Short term, we could rally back towards 17, and then we could roll over again to the downside and make a nominal new low in March, and then have a much better rally in the spring. That's bullish scenario number one. Number two, this could be a V bottom, and then we could rally right back to the 17 area, pull back a little bit, and then go again. Scenario number two. And number three is we run, we roll over, we take out these lows, and you see a trap door that where the Dow falls to, I have no idea yet. Let's call it between 13 and 14,000. And then it be from this low, the 13, 14,000 low, that we literally go vertical, a la 1987, 86, 87. Oh, that's what I got tonight. We covered a lot in a short period of time. My toes are frozen. I hate this. That's what I hate about winter. I love skiing, as you guys all know, but my feet are frozen. I took a hot shower, and my feet freeze essentially from November until the end of April. They're intermittently warm, but I'll be going to Florida. Oh, I'm going to Florida a week from tomorrow for work. My toes will warm up in Florida. I'm looking forward to that. What are my thoughts on the S&P this week? Kevin, and what about volatility? I've said volatility is here for a long time, so I think it's going to remain volatile. That's one. The bulls right now are in control. If the bears want to do something, they got to do it early this week. I think if the bulls are allowed to get to the end of Wednesday and the market's hanging out this level or higher, you got another leg coming. So the bears got to step up now. It's so funny, my Twitter stream during the decline, everyone's a bear. Everyone called it from the top. I did not, as you guys know. Everyone knew, they knew. At the bottom, I was the only one that said, boy, today's the bottom, and you should buy the dip, don't sell the rally. Now the bears are nowhere to be seen, which I always find funny. Let's see, Johanna, what about, Johanna, I don't cover the meets. I don't like the way eSignal makes the charts. It's too hard to discuss. And they trade kind of funky, so I'm not a good one. You want to know about the Norwegian krona? Um, you know what? I think there's a currency share for the Norwegian krona. Let's see. Krona ETF. NOKP. Nope. Why didn't it come up? Is it no more? Ticker symbol. NOKP. Oh, it's listed in Brit in the London Stock Exchange. Hold on, let me go back. Yeah. Can't find it. I guess there's not a currency share on the krona. Let's see. Oh, I know it's an equity. Here's the krona. Okay, yeah. That's not it. Okay, so I can't help you, Joanna. I apologize. FXS is, I think, the Swedish one, or the Singapore dollar. Swedish krona. Looks like a lot of the other currencies just beaten down. I don't know what the Norwegian one is. Sorry. I don't think you did it on e-signal, Johanna, because the dollar on e-signal is DX. John, with Japan going negative, will that affect the Fed's plan to keep raising rates? I believe it will. I mean, oh, you know we didn't cover? Duh. The dollar. You guys, let me fall asleep. The dollar. Huge move on Friday, obviously because the yen weakened. What do I think? Nothing has changed. I'm still uber bullish the dollar, intermediate long term, but this day changed my opinion in the short term. I think we trade within this band for a while. And we still bounce around. Ultimately, I think the dollar is going to go 10 to 20% higher. All right, last call. Any time is it? 9:10. Last call. Any other questions? My eyeball hurts. Questions, comments, concerns? Fading fast. I skied hard today. It was like, what was it, 47 degrees in the afternoon. Thankfully, the sun did not come out, or else it would have been. It got sloppy and soft. So my legs pushed against all that soft snow. It hurt. Is uranium moving with the rest? We've once found the symbol for uranium, and I can't recall what it is. But if you guys can let me know any signal, I'll pull it up. URA. Is that what it is? URA? No. This isn't. I don't think this is it. Let's see what URA. Oh, it's a uranium ETF. Yeah, I don't. It's probably a flawed ETF like the natural gas one, but it looks like uranium looks like the stock market kind of. I did sugar, Adine. It finally began to break down, thankfully, because we talked about it forever. I still, I've said this for months. I think sugar ultimately is going to retrace most of this rally. So back down towards the 1050 level. So you can short any rally, or if you're short, just put a stop in and make sure that you don't turn a winner into a loser. JN, no, there's no family of ETFs I prefer over another. I think you just got to take it on an individual basis. I definitely don't want to generalize. All right, last call. So I said a couple of times this year that I think this is the year that high yield bonds put in one of those major bottoms. Could we have seen the bottom already? Yeah, it's possible. Definitely possible. We'll know obviously the benefit of hindsight, but I'm going to probably jump on high yield sooner than later. Once again, give it a shot to the long side. What's your opinion? Is the dominant theme for Q1? Are there any correlation given that way? Nick, I don't think. No. The dominant theme in Q1 is energy, and the dominant theme in Q2 will likely be energy as well. Hopefully, it'll be a calming down of volatility in energy, but that's what I think the biggest theme for the first 6 months of the year. In the markets, anyway, forgetting about politics and that kind of nonsense. Are the broker-dealers stronger than the banks? Nope. They are equally as crummy as the banks. Equal stinky distinction. Do you want to wait until high yield bonds all go belly up? Yes, so Scott, that will be that. So if you want a bell to ring, the bell to ring will be when you get some more high-profile defaults or bankruptcies in high yield bonds, in my opinion, for sure. But that's a pretty significant low we put in. Maybe we get a tradable rally here in high yield. We can get a couple more percent out of it, and then they roll over again. As I said a couple of times, I'll have no problem getting in a couple of times, getting stopped out, come back to fight another day. I don't want to miss when they really go. JN, I don't do a lot of work on Gunlock's funds. His favorite bond fund is more of a mortgage fund than anything else, which I don't do a lot of work in. So I think he's a really bright guy, and knows a lot of stuff. It just doesn't really fit with what I do. Of the three scenarios I mentioned regarding the market, any that I'm leaning towards? Not yet, RJ, but a week or two from now, I'll definitely have a stronger opinion. Just happy I got something right for a change with the market putting in a bottom on Wednesday. Getting tired of getting nicked up. Okay, that is all. We're gonna call it a night. The webinar will run. Tiny will come in and edit it, and we will go from there. So, wish you all a good week. And remember, next week we're gonna hook up at 5 o'clock on Saturday. See ya.